So it's another time we meet for the class of advanced financial reporting. So we are going to do a question for insurance firms. And these are the relevant questions as displayed on the other side. So I think you'll confirm if you are seeing the question. I think the question is visible on the other side.
What year is the question?
The one I shared to the group.
They gave us 2014 question 4.
But it's not in advanced level, it's in
Section 3.
financial reporting section 3, because there's no insurance question we can use for insurance in the advanced level. Remember that this is a new topic, so it was just a topic I uplifted from section 3. So they are saying differentiate between terms commission on reinsurance ceded and commission on reinsurance accepted. So I have explained about those two terminologies, of which we said that for the cedent, it's all about the commission receivable from reinsurance, the one which is receivable. So based on the premiums, which you did what? You gave out to another insurance firm. And for the commission accepted, is the commission payable to the reinsurance business. So meaning that it's based on the premiums you received from another insurance firm. Number B, the foreign trial balance was extracted from the books of the Apex Insurance Limited, which specializes in general insurance as of 31st October 2014. Are you seeing the question I'm reading on the screen? That is what I was confirming.
Yes.
So we have direct premium received, reinsurance premium received, reinsurance premium paid, accounts receivable, bank balance and cash in hand, bank balance and the cash in hand, bank balance and the cash in hand. So the bank balance and the cash in hand. Then it continues at this point, whereby they talk about unearned. They talk about unearned premium as at 1st November 2013. We have claims outstanding as at 1st November 2013. Claims paid, legal costs, survey expenses, relating to claims, marine, bad debt written off, investment in shares, freehold property, motor vehicle, machinery and equipment, furniture, audit fees, director's fees, depreciation on non-current assets, management expenses, accounts payable, investment income, ordinary share capital, share premium, retained profit as at 1st November 2013, premiums outstanding as at 1st November 2013. Additional information, premiums outstanding as at 31st October 2014 amounted to 36,016,800,000 for marine and fire insurance respectively. Claims intimated and outstanding as at 31st October 2014 amounted to 18 million for marine insurance and shillings 11,520,000 for fire insurance. Number 3, unearned premium reserves for an expired risk is to be maintained at 100% and 50% of the premiums for marine and fire, respectively. Commission on both reinsurance ceded and reinsurance accepted is at the rate of 5% of the premiums. The directors have proposed a dividend of 5% on the outstanding share capital as at 31st October 2014. The tax rate applicable is 30%, so required revenue account for both marine and fire insurance for the year ended 31st October 2014. Then we have the statement of financial, the statement of comprehensive income and the statement of financial position. So they need those three statements. You know, they need those three statements. So the revenue account, the income statement, and statement of financial position. So let's start from the revenue account. Let's start from the revenue account. So when we talk about insurance, when we talk about insurance funds, so we are using a equation of intermediate level. Intermediate level. That equation is from intermediate level, but now it's on the advanced financial reporting, FI. So it's the question is for Apex remittent. So the Apex remittent. So we start from revenue account. We start from the revenue account. So revenue account. So that is for the year. For the year ended. So our financial year was ending when? So let me check from my question. I think you have the question because I shared earlier. I assume that you have it. So I will be expecting a lot of cooperation from your side so that we finish the equation very fast. So our financial year ends when? So that is according to the year 31st October 2014. So it's according to 31st October 2014. And I think everything is okay from my side, meaning you are seeing what I'm doing on the board. Just a confirmation, yes or no, or the very challenge. All right, so for the format, I said that we start from premiums. So you talk about direct premium received. So the direct premium received. So these are the direct premium received. Remember that when we are talking about a revenue account, you deal with the policies. You present this revenue account based on the policies they were dealing with. So in that question, you can see marine and fire. It appears based on various items we are provided. I think you can see that from direct premium received, marine fire, reinsurance premium received, marine fire, reinsurance premium paid, marine. So that is what they were dealing with, the marine and fire policies. So direct premium received, what's the figure for the direct premium received?
On which side?
180,000. And on the other side for fire, 84.
84,000.
These are the premiums received from the insured parties. Then this insurance firm received other premiums from another insurance firm. That is why you will find that it will have to pay what? Commission. Being a commission accepted. So the commission accepted would be based on the reinsurance. When I will come to mention about commission accepted, know that it will be based on the reinsurance premium received. That is from another insurance firm. Reinsurance premium received. So for the reinsurance premium received, from my equation, I can see it's 28,800 and 19,200. Then after the insurance premium received, you will find that maybe they went ahead to do what? To give out some what?
Balance carried down.
No, we have not reached at that point. So you will find that they gave out premiums to another insurance firm. So reinsurance yeah, paid, reinsurance premium paid. These are the premiums which Apex gave out to another insurance firm, meaning that Apex will be receiving commission, and that one will be called commission ceded. So meaning that when I will be mentioning commission ceded, know that it will be on the reinsurance premium paid. So for now, we are not at the point of commission. We'll come to that point later. So we have 19,200 and 12,000. So this one you have to reduce. Then next, we have to talk about now the outstanding premiums, which one of your students was talking of. So the outstanding premiums brought down. Outstanding premiums brought down. That is at the start, and the outstanding premiums at the end. Outstanding premiums at the end. That is carried down. So for the outstanding premiums brought down, what's the figure? So which is the figure there? Outstanding premiums at the start.
21,600.
21,600. 16.
800.
800. So this one you have to raise against the premiums which you receive, because these are the premiums outstanding as at the start of the year, this year, which is starting on 1st November 2013, meaning that these are the premiums you expected to receive in the previous year, but you never received. But there's some which you have received this year, meaning that these premiums must be reduced against what you have received this year. Then you add what you have not received by the end of the year. So the outstanding premiums at the end, that is according to additional information number 1, 36,000 and what?
16,800.
And the 16,800. So up to that point, you can give me the figures. So do the summation so that we get the net premiums. I think you have calculators in your table. That is the figures for marine and fire. So use your calculator.
132,000.
The first one is 132,000. And the second one is?
91,200.
21,200.
91,200. So after talking about the net premiums, now you go ahead and look for the unearned premium reserve. Unearned premium reserve. Balance drawdown. And unearned premium. Reserve. Balance carried down. So unearned premium reserve as at the start and as at the end of the year. So checking in my equation here, I can see unearned premium as at 1st November 2013. 115,
200.
200, and the 60,000. This one, the other side. What about unearned premium reserve balance carried down? So if you take in additional information number 3, they said unearned premium reserves for an expired risk is maintained at 100% and 50% of the premium for marine and fire respectively. 100% and 50% of the premiums. These are the net premiums. So 100% of 132,000 is 132. This one you raise. Then 50% of 91,200 is 40 something, 40.
45,600.
45,600. So this one automatically it will be 115,200 because this and this cancel out. Now what about this? So that we get, that is
5,600.
105.
600.
And so that is the gross revenue. So we are done with premiums. That is the first part. So after premiums, we go to claims. It's a continuation. We move to claims. So you can name this one A. If you are done with the premiums, you can call this one A. And now claims, it's a continuation. So marine, and we have fire. So we talk about claims. So claims paid So the claims they paid. So checking in that question, claims paid, marine and fire, 59, 59 to 80. 59 to 80, and 43 watts, 200. Then was there anything related to claims before we talk about the outstanding claims as at the start and as at the end of the year? So in that question, in the relevant question, they talked about outstanding claims balance brought down being, or before I mention about the outstanding claims balance brought down, in my question I can see there is a survey expenses. Survey expenses related to claims. But they were very specific that these survey expenses is related to what? To claims. But it goes to marine. 7680. Then kuna mtu ako na homa. Mtu,
Yes,
are you the one?
it's passing.
So we have survey expenses 7680. Then we talk about outstanding claims, balance brought down, and we talk about outstanding claims, balance carried down. So outstanding claims at the start of the year is balance brought down.
19,200.
19,200. 19,200. So remember that these one are the one we deduct from what has been paid. Because these are the one which was outstanding from the previous year, which have not been paid yet. But there's some claims we have paid this year. So you have to reduce this against what you have paid. So 19,200 and what? Outstanding 1st November, 19,200 and 12,960. So the one which are outstanding as at the end of the year, that is according to additional information number 2. Remember that they are just claims which are not yet paid. The outstanding is something which has not yet been paid. Another name for that is claims intimated. Claims intimated. That is what they said in note 2. Claims intimated and outstanding, 31st October 2014, amounted to 18 and what? And 11,520. Give me the summations for those claims. And after claims, we talk about commission. So someone can do for marine and another student can do for fire. So for marine, then for fire.
65,760.
65,760. And this one is
41.
what do you have?
41. 41, 760.
41?
760.
41, 760. I think that is okay. And then we talk about commission. We talk about commission accepted and the commission ceded. Accepted and the commission ceded. So the commission accepted, remember that we say that the commission accepted and ceded. So accepted is done what? Payable. It's payable. And that one means that it's based on the premiums you received. It's based on this. When ceded, it's receivable. Receivable. That is a commission receivable, which is based on the reinsurance premiums paid. So they said in additional information that that is according to note 4, commission on both reinsurance ceded and reinsurance accepted is at the rate of 5% of the premiums. So 5% of this figure. So 5% of 28,800 and 19,200.
1440.
5% of 28,800 is
1440.
1440. Then 5% of this 19,200.
960.
960.
Meaning that this is 960. But seeded is the one you subtract, but you can net either. Then 5% of 12,000.
600.
600. 5% of this is 600. And so get those totals, then we go to expenses. Again, here you deal with specific expenses related to marine and fire. So this is 360. Then the first one, 1440 minus 960 is
480.
So checking in my equation for expenses, the one which are specifically related to marine and fire only, we have legal costs of 43. Legal cost of 43 what? 4320. That 120 there. Remember that for the survey expenses, they say they were relating to claims, so that one has appeared under claims. Then bad debt written off. So for the bad debt written off, they are again very specific. 4080, 2880. Then for management expenses, again, that is a very specific expense because they have said 15,600 goes to marine and 13,920 goes to fire. There is no another expense. Even if there are others, they are not specific that they are relating to marine and fire. Like, we have audit fees, director's fees. So those ones will appear in the income statement, the general income statement. So the only expense you record here are the one which are specific to marine and fire. So the total value of those expenses what are the values there?
24,000.
So 24,000.
19,920.
So here we have 24,000. And we have
920.
So when we were talking about premiums, this was A, this one was B. For claims, commission is C, expenses is D. So underwritten profit, or loss, you take A minus B minus C minus D. A minus B minus C minus D.
For marine, 24,960.
24,960.
For fire, 43,560.
43,560. So that is all about the revenue account.
Wait, to screenshot.
Oh, that is fine. That is fine. So this is revenue account. So Apex Limited. So you can screenshot it there. Or I give you 2 minutes. Whoever is taking notes, you can take notes. Then we continue.
I have a question.
Yes.
So we get commission accepted from insurance premium received or paid.
Sorry?
The percentage we converted for commission accepted, we got it from the insurance premium received or insurance premium paid.
Accepted, we said is the commission payable, which has not been paid anyway. So it's all about the commission payable to reinsurance business. Meaning that you will be paying the commission based on the premiums you received from another insurance fund. So accepted is on reinsurance premiums received. And for the commission ceded, it's the one which you are supposed to receive, but you have not received. It will only you will only receive that commission based on the premiums to give out to another insurance. So reinsurance premiums paid.
Thank you. Thank you.
So are you done?
Yes, thank you.
Not yet.
Continue then. And see there are students coming in. So statement of comprehensive income. So statement of comprehensive income. So that is for the year. For the year ended 31st October 2014. So now for the statement of comprehensive income, remember now this one is generally for the insurance fund, the Apex in general. So meaning that we don't have to talk about the 2 columns, but we will have to add what we got from the revenue account, being our income, or if it's a loss, it's an expense. Then we continue checking for the maybe another income which was there, which the insurance firm generated. Then we raise expenses, meaning that I will have 2 columns here, but not for marine and fire, because what I will be doing here is generally for the farm. So in the revenue account, we got an underwritten profit. That is for marine and for fire. So for marine, it was 24. And for fire, it was, you have the figure.
24,960.
This one is 24,960.
And 43,560.
43,560. Yes, if you sum them, 24,960 plus 43,560. The total? I don't have a calculator here. I could have been doing this figure. I could have been doing this calculation.
68,
68?
520.
520.
Then you add other incomes, other general business incomes. So checking on this question, there is a investment income. Using that one, there's investment income. So the investment income there after accounts payable is 67,20. 67,20. Is there another income? So meaning that the total gross income will be 68,520 plus 67,20, the investment income. Then you raise the
240.
75.
240.
Yeah. Rest expenses. So which expenses do we have? Now the general, other than the one who are related to marine and fire. So checking in the trial balance, we have audit fees. We have the audit fees. Audit fees is at what figure? Is that one 5760? You can confirm from your end. And we have director's fees. So the director's fees is at what figure? 11,880.
880.
Then after that, we have depreciation on non-current assets. The depreciation on non-current assets, 21.
720.
21,720. I think those are the expenses we have. Is there any other expense you can see? So the total 5760 plus 11,880 plus 21,720.
39,360.
39,360. IRS 75 to 40. So that is profit before tax. So 75 to 40. That is
588.
880. Rest tax. So which is the income tax do we have here? So the income, they said in note 6, the tax rate applicable is 30%.
Yes.
30% of 35,880. What's the figure?
10,764.
That is?
10,764.
Profit after tax.
$25,116.
25,116. Then add the retained profit, go down. That is as at the start of the year, meaning that this is the profit from the previous year. So there's a retained profit 1st November 2013 of 10,800. Then they paid some dividends. You raise the dividends paid. Did they pay or they proposed? Proposed. Dividend paid, so proposed. Or we have both. So we have the proposed, that is according to note 5. The directors have proposed a dividend of 5% of the outstanding share capital as at 31st October 2014. 5% of the share capital, 5% of the share capital. They are paying dividends, 5% of the share capital. Share capital at the start of the question, or at the end of that question, at the end of that, towards the end of that trial balance, there is that share capital, ordinary share capital of 72,000. So 5% of the ordinary share capital.
It's 600.
That is
3,600.
that is 600. So what you do? That one you deduct. So 25, 116 plus 10,800 minus 3,600.
It's 360.
32.
360.
So 32, 316. That is now the retained profit
Down.
balance carried down. And that is how you are supposed to do the income statement. So we talk about statement of financial position for the Apex Limited. So non-current assets. So the non-current assets you have in your equation, which are some of the non-current assets you have here. We have investment in shares. Remember, when you invest in shares, that is a long-term investment. We have investment in shares. We have freehold
Property.
Property. We have motor vehicle,
Vehicle net book value.
furniture,
Machinery. and
investment.
equipment.
Investment is 33,
Yes.
600. So freehold property 100,
800.
800. Motor vehicle 84. You can see even they have said net book value, meaning that they have deducted depreciation. Furniture net book value. Net book value is the same as carrying amount after deducting depreciation from the cost. Furniture.
Furniture is that 200.
Current assets. So the current assets is all about accounts receivable, the data. So here we don't have stock. We have started with stock, but we don't have
What
stock.
about
Machinery.
machinery?
Machinery. I have skipped,
Machinery and equipment.
I have skipped that. So that is the one which is 36. Machinery and equipment. So we have 36,000. And I was saying it's better I start with outstanding what? Outstanding premiums. Carry down. So these are the premiums they expect to receive. They have not received. So you add the one for marine and fire. Outstanding premiums, carry down. It was 36. That is not one.
Yes.
36,000 plus
16,800.
16,800. What do you have?
52,800.
52,800. Then accounts receivable. So accounts receivable, the debtors. that is 17, 520.
20.
So after that, we have bank balance and cash in hand. Bank balance and cash in hand, 2640. Which other current assets can you see?
Commission outstanding.
Yeah, so the commission, which you were supposed to receive, so the one which is receivable, the one receivable is seeded.
Yes, commission seeded.
This is the receivable. So it was
960 plus 600.
so that is 1560.
Yes.
Total assets. So here we have equity and liabilities. So we have the ordinary share capital. So shillings. So the ordinary share capital is 72,000. Was there a share premium? Yes. Share premium
24,000.
So there's something they reserved for an expired risk.
Retained profits.
Retained profit. That one from the income statement, it was
32,316.
32,
316.
316. Then we have an earned premium reserve. So the one they set aside to cater for the premiums they might not receive. Sometimes they say premiums for unexpired risk. So you can add for both, that is for both marine and fire. The figure for marine was?
132,000.
So this one was at 100% of the net premiums plus the 50% of the net premiums we got.
45,600.
45,600.
If you add the two,
177, 600.
177,600. So is there any long-term liability in this question of ours?
It's not there.
I don't think if there's any long-term liability. So the liability which can be due for a period exceeding 12 months, you know, long-term loans and debentures, deferred tax. You did financial accounting, financial reporting, you know these items. So we don't have non-current, we have current liabilities. So the current liabilities accounts payable. So accounts
7920.
7920. So then we have, remember the claims they have not paid is a liability. Is it claims, outstanding claims, balance carried down? The claims they have not paid, outstanding claims, balances carried down, or we call them intimated claims, balance carried down. So that was according to note what?
Not 2.
18,000. 11,520. Sum If you add the two, what do you add?
29, 520.
29?
520.
Then we talked about commission accepting, the one which is payable on reinsurance premium received. So this one was
We had two figures, 1440 and 960.
then finally you talk about proposed dividends, but they have not been paid. It was 5% of the share capital. So 1440 plus 960.
2400.
So this is 2400. Proposed dividends. It was 5% of the share capital.
3600.
3600. Eh?
Yes.
Anything remaining? Another tax, current tax. Eh? It has not been paid. Eh? Note 6, they say current tax applicable. Anyway, current tax is obvious. The tax that was
Corporation tax.
the corporation tax that was supposed to pay this year.
30% of
The tax. It was 30% of the profit before tax.
Which is
10.
10,764.
Okay.
764.
I check if our question is balancing.
Okay.
Kwani Mutuguli umemaliza sana?
So, unajua mimi ikikuja balance sheet na kuanga kawembe.
Anyway, it's a good challenge, and it's a good experience. Eh? So the total assets, the value of total assets. What's your figure? You were saying that you are done.
The first one is 361.20.
361.20. The same way with the equities and liabilities. Eh?
Yes.
And that is good then. So in short, it's not all about balancing. It's all about getting the concept. These entries are more than 20. In an exam, they don't need all of this. Can you be able to score at least 10? Because I know the statement of financial position was in need of how many marks? 6. So they can even be in need of 6. 1, 2, 3, 4, 5, 6. You can score the marks by this point, or they decide maybe it's very rare they give half a mark, very rare. They obviously give 1 mark, or they multiply by 2. Like now they can decide you get the 3, but now this one, we have many entries. They cannot say they multiply. But they are sitting, they were very, very, very fair. In every question, you will find that they were multiplying by 2. Like now, yeah, if you were in need of 6 marks, they need any 3, any corrected 3 entries. They multiply by 2. You get your 6. How can you miss 3? How can you miss 3? Anyway,